Live from our Smokehouse studio, it's time for Real Estate Jerky. All your real estate questions answered by our provocatively lean expert hosts, Ed Parcaut, MBA veteran and president of Lending for Living, and the refreshingly wise realtor, Erin Custer, specializing in residential, commercial, and ag real estate at PMZ Real Estate. Mortgage and real estate wisdom stretching over 50 years. Plenty to chew on, starting now.
Hey, good afternoon. It's great to be with you today with my co-host, Erin Custer. How you doing, Erin?
I'm great. How are you?
Good. You know what we're talking about today?
My new baby.
We'll get there in a second.
Okay.
We're talking about credit scores and interest rates and how they affect each other, because there's a lot of misinformation out there in the market. You know, a lot of people Google stuff and they don't get the right information. So we're going to go over that today. But since you already talked about it, let's jump into what's the best thing that happened to you this week.
Well, I did want to say that people do that. They get on and they try to figure out their credit scores, and it's not what we use in the mortgage industry or in real estate. So I'm glad we're talking about that. Yeah,
go ahead.
My little baby. Okay, this week, my firstborn had her firstborn, and I have a little tiny baby Gray, and she was named Gray Cody Lucia Dowling. That's her 4 names. Anyway, she's adorable. She's sweet. She has blue sapphire eyes, and she looks right into my soul. I love her. I'm so thankful.
Congratulations.
Thank you.
I'm so sorry for signing that name on everything.
I wonder what she's going to do. I just call her now Baby Gray. So, and I have my 5-month-old, Kevin's baby. And Kevin got deployed. So it's been a big week.
Wow.
Yeah. I know, huh?
Yeah. The best thing about this week for me is making fun. Every time you told me you're going to the hospital and the baby was coming, I said, I think it's not coming today.
I know, I'm so mad at you. It's your fault, because the baby was supposed to be here on Sunday. And you kept saying, it's not coming on Sunday. I go, how do you know? This baby's been dead on right. Everything time by time by time. And all of a sudden she didn't come on.
Well, normally first babies don't come on time. So.
She was born on Tuesday because of you.
Yeah, it's my fault.
Anyway.
Blame me for everything.
It was really the very best thing that happened this week to me.
Really?
Yeah. It was bittersweet, though, because then my son, he left 2 days later. I've been emotional. I've been crying all week. It's okay, though. I'm good. Look how happy I am.
You're very happy.
Yeah. So how about you? What's the best thing that happened to you
I
this
just said
week?
I've helped make fun of you all week.
No, that wasn't the best thing. Come on.
It was.
It had to be something. You do. You have.
Did you see all the cameras in here today? They're actually
I know.
us.
Hi. This gentleman that's doing this video, he also videoed my son's Distinguished Flying Cross dinner.
Oh, really?
And he's an amazing artist. And if you need somebody, he's your man. Call us. We'll get you connected.
Okay. So I know you were in my industry for a few years, so you know about credit scores and all that stuff.
A lot of years. Yeah.
I didn't have to. They say we were in this for 50 years. I didn't want to say that was mainly you.
And that you have no experience.
Exactly.
You're an old man, too, just like me.
Well, now they can see that.
No, they can tell.
That's
hey,
correct.
How come you're not wearing your 3-piece pinstripe suit?
I haven't worn a suit since 2006.
I saw you in a suit.
Well, that's for unique situations, certain places. But for work, I dress for a lot of my clients. Now, if I go to see a CEO of some company, I'm going to dress up a little bit differently. But most of my clients don't want to see me in a suit.
No, Same for me, too. I dress casual.
Yeah. I mean, the other thing is I do a Tuolumne County. If I showed up in a suit, they wouldn't even talk to me.
They'd chew you with the shotgun. They'd say, boy, what are you doing here? Get out of here.
That's right.
So anyway, okay.
So
I'm really, really excited to talk about credit because it's so important. There's so many things that people can do to get themselves positioned to be able to have their dream home or their forever home or their starter home. I'm pretty excited. So I'm waiting for you, the big guru, to tell us everything. So it's going to be great.
We'll get into that after you want to talk to us about your... Let's see, what are we supposed to be doing? Basically, we're supposed to talk about they're supposed to do a promo for you. We'll get to that, but right now we don't have one for you, so you have to talk about your listings without
Okay,
your
but I
promo.
want you to say your thing that you said to me in the green room without my tropical fruit plate.
That's going to be on my segment, not your segment.
Can you try it out on my segment? Because it's a really good lead-in.
That's for me. You got to get your own lead-in.
Well, you just told me. I thought you were sharing. Okay.
Okay, now it's time for Erin's most excellent listings. There you go. There's your promo.
Oh, I hear some music.
There you go. Your horns and everything. All All right, they're not going to wait forever. Come on.
Okay, here we go. So, first of all, I wanted to say that in San Joaquin County, there's 1,124 houses on the market. That's down 400 or 500 houses, and only 423 sold last month. And then in Stanislaus, we only have 1,000 houses, 1,003 on the market, and only 336 sold. So inventory is going down.
Inventory is really low.
It's really, really low. I have tons of wonderful listings to talk to you about that I'm thrilled about. One is a home where you can sell. You can take everybody in your family, sell all their homes, and then move into this home. And it's in a beautiful area of Manteca North. It's 836 Glen Abbey, and it is a 5-bedroom, 5-bathroom home, and it's stunning. It has a downstairs living room, an upstairs living room, a downstairs laundry, an upstairs laundry. The kitchen is custom and beautiful. The dining room is beautiful. The workout room is beautiful. The suites, the bedrooms are all master suites and junior suites, and a casita where they have a living room, a bedroom, a walk-in closet, and a bathroom. And I'm telling you, this house is beautifully landscaped inside and out. So if you're interested in something like that, please give me a call. I have the most beautiful house on the block.
Then, Erin, on that one,
yeah,
is that like a master bedroom upstairs or downstairs?
Both.
Oh, there's two?
There's two, and actually the master bedroom downstairs has a custom closet where they built a double walk-in closet and customized the bathroom, and there's windows, and it's just beautiful with a fireplace. It's the most stunning home I've been in a long, long time. And then I have some first-time buyer homes. You know what? I'm really liking Turlock this week. Turlock has here's a property for $199,000.
Really?
Yes, it's a 2-2. Yes, in Turlock. Here's another one that's a 3-2 for only $295. That's still within a first-time buyer program. I have another home that I'm loving in Turlock that's $259,000, and it's a 3-2. I can't believe it. Turlock is the town this week. One also that's a 2-1, perfect first-time buyer product, and it's only $220. I have a couple here in Modesto, one on Elmo Loop. You can get this first-time buyer product. It's a 2-2 for only $211,000. There's another adorable product on Lorraine Court. It's $299. That one's a 3-2. I mean, I have a plethora of properties here. Another one in Modesto that's a 3-2 that's only $290. And so we have a mirage of product north and south. I've been showing a lot of product in Stockton this week. Lots of $200,000 homes, beautifully redone. And so if you're excited, please call me. If you're renting right now, you can buy a home. We can help you get started. Give us a call here. And how about you, Ed?
How about me? What's
Yeah.
amazing about those is you can do 100% financing on a lot of those properties, whether it's VA 100% financing. You can do CalHAFA, which is 0 down. You don't have to, and your closing costs could be paid by seller, so you can get in there for no money down on a lot of those properties.
And also, too, on some properties that are in rural areas, and we have to check our maps, but those are USDA, and they're 100%, and they're back in business, right?
Oh, yeah, they actually opened the government so we could close some of those this week.
Yeah, so,
Yeah.
I mean, there's tons of opportunity out there for you. So don't listen to the naysayers about there's no inventory. It's just not true.
And feel free to give Erin a call at 209-380-2142. That's her direct number.
Yes.
And you can call us during the show here. You can hit, we have a couple different ways to get in here. If you have a landline, it's 209-551-3483. And then you can hit, otherwise, if you have a mobile phone, you can hit pound 250, say the keyword real estate jerky, and then it gets you right into it.
Yeah.
Yep.
And then also, how about what's your number, Ed, to get you direct?
That's 209-846-9270, and that's my office.
I'm telling you, he's one of the best lenders I've ever worked with. I'm thrilled. And I know that when I have a client that has a situation and they need some help, I know that he's going to find a way to help them legally do a loan.
Right. And
which
you
is
actually
what I
sent
love.
me a couple of people this last week that were with other people that they couldn't get it done. So
Yeah, we were losing deals.
Yeah,
so, yeah.
And it's not, it's just how a lot of people like myself in this area will work and do it to get it done. So, there's a good, thanks, Luke. Luke's telling me we got to take a break.
Yeah, and there's one more thing too. You tell them all the information so there's no surprises, and that's what I love as well.
Yeah. Which gets me in trouble at home.
Does it?
Yes, all the
Good,
time.
you deserve it.
Hey, we'll be right back after this break, taking your calls. And we made calling in so easy, as I talked about before. Hit from your mobile phone, pound 250, or is that hashtag 250, and say the keyword real estate jerky, and you'll be connected. How simple is that? All right, we'll talk to you when we get back.
All right.
All right, first 15 minutes done. Pretty easy. All right, so when we get back, I'll talk about my Erin.
I need a tissue.
All right, we're out here. Here's your tissues. You crying again?
I've been crying all week. And it's stupid stuff, like somebody says the name of a flower and I start bawling.
Join Mark Patrick Hypnosis and stop smoking now without cravings, irritability, weight gain, or your money back.
Okay, so do you want me to ask you questions?
Yeah, right here. It says, right here you got to say, what's new in the market today? That's your job. Come on, read the paper.
Okay, wait, where are we starting?
We have to go back before the segment because we didn't have enough time because you were talking about your baby and all the listings.
Oh, I'm sorry, did I take too long on my
Yeah, you're only supposed to have 2 minutes for the listings.
How long did I take?
I have no idea.
See? He's next. He says I take all of his airtime.
Destroy unwanted cravings.
I mean, it's amazing how Marlene puts this so we don't have to think of anything. It's all on here. You know,
I think she does an amazing job.
There's a seminar Friday, February 8th at the Stockton Hilton Hotel. Weight loss seminar.
So I'll bring
Did you just say that so it's on tape so he can show it to her and then she'll like you more?
No.
Don't lie.
I don't lie. I don't need to. So right before the break, you see that, right? Yes. So after I come back, you can just ask me that question.
Americans are always moving targets. Easy.
Oh, this one right here.
Yeah, that
Radio
last
reaches
little.
93% of Americans every
What else do you want to ask?
Well, then you go into the credit stuff. I'll let you talk about the credit, and then we'll start getting into how
So when you want to connect with all
credit
those
score is
girls,
important.
adults,
You should have that
millennials,
on that second page thing,
.com.
not this one, the other thing, the other one.
No one should feel unsafe.
Is that it? Yeah. See on that side, I can't see that. It's front page.
From day one.
Yeah, that's the one. It tells you about credit on the other side.
Simply say blank
Right.
The first website calls Simply
I don't have
Safe.
anything.
Respect security.
I didn't mind it.
Wirecutter.com. Get 10% off at SimplySafeUSA.com.
Must have missed that page when I printed.
SimplySafeUSA.com.
What page?
10% off
The pages I'm missing.
Safe system.
Do you need?
I'm good. I got it here on my
have
screen.
extras.
60-day money back.
I'm not supposed to do paper anymore, but I do.
$1,000
Oh, yeah, sure.
Put some money in your pocket.
Are you going to shout out to Dream Masters?
When you hear the
Yeah, I think so. They're going to be coming on our show. I think that's who's coming on our show next week.
You did this. We'll be right back.
All right. I'm going to come in and intro 2, liner 3.
On already discounted items. Try our
And then I'll go out again, and then you do
No,
the
it's
next
always
2.
all about you, but that's okay.
No,
I'm with you.
it's all about me. I'll put a bleep in there.
God.
You need another pen there, Aaron?
Oh my God.
Just sit it down up there.
Bitter-free guarantee. If your body's still
I like it better when we're not on
free
tape.
of charge,
Why?
you just pay
Because then nobody can see me. Like,
They want the behind the scenes stuff. What happens behind the scenes?
What?
They want-
without any tools. And use the code
They want behind the scenes stuff.
Okay.
So that people know what we're doing. So it's not always edited perfectly.
I can't make this stay where it's supposed to stay.
Ready? We're coming back.
Oh God.
Hey, we're back. We're talking about credit scores and interest rates. We can take your calls now, even from your mobile phone at pound 250 and use the key phrase real estate jerky. If you're on a landline, dial 209-551-3483. All right, let's get going. How are we doing there, Erin? What do you want to talk about next?
I want you to capitalize on the mortgage market.
So you want
and
to know
the
what's going on in the
rates.
market right now?
And I want you to do your thing that you told me earlier.
All right, jobs are up, wages up, interest rates are down, and inflation's in check. What more needs to be said?
Nothing. That was so good.
So about the jobs, you saw the report that came out on Friday. Are you done making all the noise over there?
I can't make it stay up. Okay.
That's all right. Basically, the came in at 304,000 jobs created, which they thought in January they were only going to create 160 because of the shutdown. So that was huge for people. However, the biggest component of that survey was the fact that wage growth went up. So that means from 3.2% to 3.5%, which means people are making more money.
Well, and some people are saying, oh, they're working 2 jobs. Those days are over. People
No,
are
most
not
people
having
can
to do
afford
that.
just to have one job now. And there's
know.
actually so many jobs, we don't have enough people for the jobs now.
I remember when I was working 3 jobs in a row just to make ends meet.
Really?
Yeah.
Wow.
3.
I'm glad you don't have to do that anymore.
I am too. I would be
And the
dead.
other amazing thing is interest rates are down. I mean, we're at our 8th month, we're back to an 8th month low, which is really good.
No, that's the part I'm super excited about because I got scared that they were going to keep raising the rates and make our buying power smaller and smaller and smaller.
Right. And what's going to affect that is the prices will eventually go up because, as you stated, the one thing I didn't talk about is the fifth thing, which is the market. There's not a lot of inventory.
Right.
Which means that we're not going to see probably a downturn. People talking about the recession. From what I've been hearing and what I've been looking at, I don't see a recession coming in 2020. It might be 2021 or 2022. We just have no idea.
Did I actually think of something you didn't think of?
Probably. What's new?
Wow.
And then the other thing about inflation in check, the Fed left their rates unchanged, which we thought they were going to do that. But they also stated that 8 times in their testimony that they're going to keep a patient look on everything. But do you know why inflation is so important to keep in check?
Why?
Do you know what the inflation rate in Venezuela is?
Ridiculous.
Yeah. It's here. Bear with me. It's at 1,370,000% this year.
Why is that? I mean, that's ridiculous.
Right. So that means in December of 2017, if something cost you $10, in 2018, that same $10 now costs you. It's on here. Cost you almost $14 million for that same item because of the inflation rate.
I don't even know what to say.
And now, and then you know what it's going to be in 2019, they think?
I can't even hear it. It hurts my feelings.
10 million %.
No wonder they want to come here.
Well, no wonder that their economy's I don't want to say in the toilet, but basically why there is. And they have one class. Everybody's poor now, basically, because of this inflation. That's why it's important for the Fed to stay on it, which is very difficult to make sure you don't overcorrect and not undercorrect to where inflation comes up. But that's unusual.
A lot of masterminds in our country keeping us balanced.
Correct.
That's good. So
I guess you really need to fix that mic on the next break, huh?
I know, it's just falling.
You need to tighten that thing right there.
Okay, I did, but it just falls.
That's the wrong way. Clockwise. There you go. All right. So let's get into the credit. You want to talk about credit
Yes,
stuff?
I wanted to explain to people what the FICO score is, or the Fair Isaac score is. Can you talk about that?
Well, basically, I didn't realize that it actually was people, because I've been in the business forever, and I read the article too. But you want to talk about who they are and just a little about what each one is, and then I'll get into what's important about credit.
Okay, sure. I'm going to even tell you it all. It says, who are Bill Fair and Earl Isaac? They actually are two gentlemen. They set up their company, Fair Isaac, in a small studio apartment in Lincoln Avenue in San Rafael, California in 1956.
Seems like everything gets started over there, doesn't it?
No, it just seems like everything starts small. That's why people should buy a small little house instead of rent, just to get started.
All right.
Don't you think?
I think so.
Earl Isaac and Earl Judd Isaac, or Earl Isaac, his name is Earl Judson Isaac. He was born in 8/7/21. And he lived till 12/12/1983. And he was born in Buffalo, New York. And he graduated from high school at age 15.
Wow.
He attended Muskingum University. He accepted an appointment at the U.S. Naval Academy, Annapolis, Maryland, in the class of 44. And he graduated 1 year early in 1943 because World War II had served as a U.S. Naval officers in the USS Missouri. After the war, he earned a Master of Science degree in mathematics at UCLA. So Fair and Isaac met when they were both working for SRI International, then known as Stanford Research Center. William Fair, a native of San Francisco, graduated from Ignatius High School and held degrees in the California Institute of Technology. So that's the IT tech, right?
Gotcha.
Yeah. And Stanford University and University of California at Berkeley. And that was my dream college. I always wanted to go there. A mathematician, he began investigating techniques for use in building credit models of predictive behavior. And he partnered with Isaac and an electrical engineer on a 50-50 basis. Computer technology allowed them to put their scoring algorithm in place. Their big break came in 1972 when the IRS contracted them to create an algorithm to locate tax evaders more accurately.
So it's their fault that the tax people can't get away.
I know, we're
these days,
so
right?
mad. I'm so mad right now. Okay, so how's the score derived? So let's just talk about some numbers, and then you'll come up with what that means, okay?
Correct, yeah.
So 35% of the algorithm is payment history, 30 is debt burden, 15 is the length of credit history, 10 are the types of credit used, installment, revolving, consumer finance, and mortgage, and 10% on recent searches. Okay, so that's so important. So talk about recent searches. What that means is.
I would 35% of that is basically payment history. So that's when a lot of people don't realize a $15 payment is the same as a $800 payment when you're making that payment on time. Right. Some people think, I just missed one $15 payment, not a big deal. Well, as you know, there from what you just read, right, basically 35% comes from the history. So if you make one little, you have one late currently, that drops your scores drastically. And that's why people have problems when they make a current late. Like you told me about a while back, you had a client in escrow, right? And they had a late payment on their credit report back in the day, and they actually lost out on that home, right?
Well, and I had a client that a $5 payment dropped his score 100 points because he was young in the credit bureau.
Right.
And he blew it with a $5 payment. It took him 2 more years to buy a house.
But and as you said, that's like length of time is only 15%. So the most important thing is pay on time. The other thing is how much is your debt burden, right?
Right.
Meaning that to me, that is, let's keep all of your limits at 50%. So if you have a $1,000 credit card, keep your amount to $500 on that card, and then you and use it normally, but basically pay down. Make sure you don't go over 50% when you use the card.
And oftentimes you'll use this verbiage with your clients, a debt to income ratio, because they're saying, well, why can't I? And then you have to explain to them about that, right?
That has to do with their income versus their debt and how much they have. But let's. One of the biggest problems with credit is people, they don't use it right? They'll get a credit card and they won't use it. You don't get history from it if you're not using it. I tell them at least put a gas on it and pay it off each month. Even if you don't want to use it, put something little on there each month.
And they don't have to have large balances. They can have a $500 balance on a credit card and just use a little bit, but pay it every month.
You're talking about the limit or the balance?
I'm talking about a limit and a balance, but they don't have to have big credit accounts. They just have to have a credit account.
Correct. It doesn't have to be a large one to give you more credit than a smaller one.
Yeah, it doesn't.
It has to do with how long you've had it, the history of payment on time, right? And then one other person told me that, just when you make your payment, don't make the minimum payment, pay $1 extra. Then you're not making the minimum payment, because they look at now the history of what payments you've made on that card now.
They were minimum, right?
Right, yeah.
Oh, goodness gracious. Now, how about when you talk about the debt burden? I keep going back to that. I wanted to know what you felt a first-time buyer should come in with credit. Like they don't have anything. Let's say they just don't have anything.
Well, the debt burden they're talking about is really looking at, if they have a limit, where are they on that debt burden, on that limit? You follow me? Not how much debt they have against their income. Like we talk about when we're looking at what can they qualify for our house. So with credit, it's really about, and I know I keep going back and forth with this, but pay on time, keep them at 50% of the limits, and then have the most important you get the most credit from is credit cards. And don't ever cancel a credit card. You know what I mean? If you get a credit card and you've had it for 10 years, but you don't use the, say it was like Sears or whatever, they're going to be gone, but say it's a card you don't use much anymore, right? Because it's expensive. Still keep it in, because once you close that out, you lose all the credit from it. It's not the same as an installment loan, where an installment loan is, I'm going to make this payment for 5 years to pay out and then pay off this car. You do that, you get the credit for that. A credit card, as long as you keep it, you get the credit for it. Once you cancel it, it's gone. Go ahead.
Okay, so I'm going to ask better. I have a young person or an older person. They have no credit at all. What should they do? What should they come in with, and where should they keep it? So we're going to talk about what kind of credit and then debt burden. Right. We're going to talk about both of those right now.
The first thing I would say, go get a credit card. If they don't have any credit at all and they can't get a regular credit card, then go get a secure credit card. That's where you give a bank $500 or whatever you work out. They take $500 from you, then they issue you a credit card for $500 limit. And as long as you use that and don't exceed it and make, late payments, that kind of stuff, eventually they'll raise it, and eventually you can get other credit cards after that.
And so on that $500, what's the most they should ever charge on it?
50%. So
okay.
$250.
And then and when you're making your payments, you either pay it off or you pay more than the minimum payment every time.
Correct. Just $1 more.
Okay. And how many cards do they need to be able to qualify?
There isn't really, you have to have so many cards anymore. It's all based.
You had to have 2 lines or 3 lines.
It used to be that way. It doesn't matter on FHA on a certain program. Certain programs have guidelines how many trade lines they want. Other ones do not.
So what's the minimum of the hardest one?
You eventually should have 3 trade lines.
Okay. So that could be a car and 2 credit cards or something.
Correct. Could be that. Or installment loan, on something. Personal line. It could be jewelry. Some people go do that. All right.
Okay.
I think we're going to step out for our next break. What do you think?
Okay. Is it your time out?
Aren't they all mine?
No.
All right, we like to honor our local veterans. So if you know a business owner who is a veteran of the armed forces, please get in touch with us. And we're giving a shout out today to Air Force veteran and past guest of this show, Mike Coelho, Airman Heating and Cooling. And they're actually coming out to my house on Monday.
Yeah.
And you can listen to that show on our podcast. And then that's on iHeartMedia.com. It's also on Stitcher. We're also on Google Play. We're also on iTunes. Any place there's a podcast, you can actually listen to us. So remember, we'll take your calls here live at 209-551-3483. Thank you. Have a great day. All right. Now you're back. It's all you now. Erin,
Is brought to you by Indeed.com.
you're now back. You don't have to take them off. Just I want to make sure you can hear me. So you're bringing us back, and then you take us out again, and then it's me again.
Communicate with candidates from an online dashboard. Learn more at Indeed.
You gotta write down all the places we're at. I keep forgetting.
Always on the move. They're in the car, at the office, Facebook.
Aaron, did you get your mic stand situated?
It just keeps falling down. Doesn't matter what I do.
Now tighten it.
I do. And then it falls down and I keep going.
And put AMFM radio.
Yeah.
Maybe you can crank on that for her because she's not putting enough.
Got it.
There.
There you go. No,
That looks solid.
and it sounds like you broke it. So is that her here or me?
That is you.
Okay.
This is her.
That's what I thought.
Yeah.
I do like
You guys are doing well.
I stumbled all over it. Sorry.
Leinster.com.
I'm on there. Let's
Leinster is now one of the largest
Wow.
retail
Because it's the cameras.
in the country.
It's the behind the scenes part of the show.
Oh no! Are you
The
kidding me?
bloopers. No, I'm kidding.
I swear, really?
Yeah, the whole show's going to be on, and what happens is during the radio time, it's going to have the radio. Then the commercial time is going to be us just talking in here because we have no commercials, and then it goes back to the radio, right?
Thank you so much,
So he doesn't want to talk, but yeah, and then after the same thing. So it's
Oh my God! Is that why
See,
the
you
camera's
just did it
pointed
again.
right at me?
yes, that's why
Oh,
we're.
great.
That way everybody can see you, and they know it's going to go on our YouTube channel. It's going to go on a lot of stuff. Then you like split it up, take parts of it, put it on your Instagram
Oh,
page.
kill me now. Can I have whiskey?
Yes, I thought you were going to bring some to begin
No
with.
way. I'm not drinking. I don't drink.
Because you're bad
when I
enough
want to.
without drinking.
Listen, I don't drink when I want to.
Oh, you drink when you don't want to?
No, what I do is like if it's a celebration, I'll have something, but I just don't go home and fix a drink or
You
something.
don't?
No. No, wait, I don't like anything influencing.
All right, so when we come back, we'll talk more about credit. One thing I want to talk about is that the single-family rents have went up. So maybe in
They did.
the fourth segment, we'll talk about that. You know, we'll go out again when you take us out. When we come back, we'll talk about that in the fourth segment, and we'll finish up on the credit over this next.
Am I taking us in right now? Huh?
Yes, ma'am. And then you take us out again. I know,
Somebody didn't
2 out of
understand this is
4,
really out.
2 out of 6. I mean, goodness gracious.
It is your shirt.
Great for balls of fire.
It's all about you.
I'll point it out. Ready?
Okay, we're back with the real scoop on credit scores and interest rates. Call us with your questions. It's super easy. Dial pound 250 and use the key phrase real estate jerky. And by the way, pound 250 works 24/7 and we love it. And you can also reach out to us on Facebook, Twitter, and Instagram or email. You can email us at radio@realestatejerky.com because we're everywhere. Isn't that so great?
Yeah, and I wonder if the young people are having problems because the pound sign is also hashtag. So is it hashtag 250 or pound 250?
Why don't we say them both from now on? But we're getting a lot of contacts, so I think it's working.
I think so too.
Okay, I wanted to tell you a little bit about the history of credit scores.
Okay.
For most of the modern economy, there was no such thing as a credit score. The lending decisions were made by a loan officer who worked at a bank, and that actually happened because when I worked at a bank, they had a platform, and these people sat up there, and they decided if they liked you, if they didn't, they gave you a credit card or whatever. It was crazy, and so
So it's basically unfair. It's not what you could do; it's who you know.
I don't know. I don't know if it was fair or not fair, but I remember that process. And I remember he's saying, I like you. You'll do this. And he gave me credit. I was like, oh, my God.
Is that when you went out and got on your horse and buggy?
No. There's no horse and buggy. Although my father did have a horse and buggy.
Yeah.
So, okay. So making the decision largely was a matter of individual judgment. So enter Bill Fair and Earl Isaac. And these two statisticians made a number of correlations between which behaviors made a person a good credit risk and which a bad one. This began in the 1950s, and for the most part, their predictions were accurate. But it wasn't until the 70s that the credit scores became an integral part of lending. So the modern name of FICO is Fair, Isaac and Company score, based on credit files from the three credit bureaus, Equifax, Experian, and TransUnion. And it was introduced in 1989. But before that, there were credit reports, but those reports weren't distilled down to the almighty three numbers. While Fair Isaac did develop a scoring system in the 50s, it didn't become prevalent until the 70s and 80s. So talk to them about the three scores, Ed.
The three scores, I mean, basically we take the middle of the three, not the average of the three. So basically, if you have say you have a 700, a 699, and then you have a 650, we would take the 699 score. And you're talking about?
Yeah, we're talking about the three scores, Equifax, Experian, and TransUnion.
Correct.
And I oftentimes have people, they'll call me and they say, hey, I have my credit score, it's this. So they don't want to talk to a lender. Right. And then I have to go through the long litany. Right. And they get it on their phone, either Credit Karma or something like that.
Right. And each one of those, they have their own algorithms. Right, Credit Karma designed their own. If you go into the disclosures, they say what it is. I can't remember what it is off the top of my head. And then Experian, TransUnion, and Equifax, they have their own, because when they give you their FICO score that you have when you're in their system, if you read all the disclosures, it says in there, our score could be different than what your lender gets when they pull credit. And the reason is we use a totally different algorithm, just like car people use totally different algorithms when they figure out their scores. Because I remember getting a car a couple years ago, and basically there were 6 scores. Right? And you were in the car industry.
Right.
But that was before credit scores, right?
No.
Oh, okay.
That was only, goodness gracious. To you, I would be
I don't
120.
remember. I didn't know when you got in the car industry. That's why I'm asking.
In 94.
Oh, okay.
So does that make me really old? Okay. But no, we still had the credit bureaus, and oftentimes we only had to use one line.
Right.
We did.
You mean the phone line?
No. But I remember when the computers came in and we were using them, and the screen was green and there were these dashes.
They called monochrome
it was
monitors
crazy.
back in the day.
But anyway, no. So it's oftentimes your credit score is going to look different than what we're going to see. So that's why even waste any time? I say call and talk to your lender, or Ed, and he's going to tell you what it really is. So that you can move from there. But there's so many more things that are involved if the credit is low to help you get to a place where you need to get. And he's great at that too.
And one of the things that there was the next gen credit score where they're coming out, where they're including, how your banking is and all that stuff. Remember that? I forget what it was called, the new one that's coming out. Fannie and Freddie said they're not going to do it, not use it. They don't want that part of their equations when they're figuring, for FICO scores. They don't want that in there. The other thing that's actually helped scores lately is they took off bankruptcies. A lot of them, that if they don't have proper information on there, they take those off, and also tax liens, like from the IRS. Because they want to make sure that everything on there is reported properly and they actually have the right information. So if you had old tax liens on, a lot of times they're not on there anymore.
Well, also,
even if they're paid, because sometimes they stayed on there even if they were paid.
And if you go into a bank that you bank with to try and get your loan, do they look at how you've paid, and if you've had overdrafts? Do they do that? I think they do.
Well, overdrafts they look at on your bank account to see you shouldn't. If you're going in for a loan, right? Mm-hmm. We're doing a home loan for you. Basically, we look at your bank account to see how many overdrafts. We don't want overdrafts, right? So basically, you need 2 months of no overdraft charges.
All right.
Right. Because if you have overdrafts, that says that you're not maybe living within your means, right? Because your bank account constantly gets overdrawn and you're not paying for things. Now, if you have overdraft protection and it pays it, that's different because it's not overdraft charges.
It's just coming out of your savings account, and they're just transferring from account to account.
Or a credit. Sometimes they have a credit. Not card, but a line of credit attached to that.
Now, we talked about what's the first thing that you need to do to get your credit so that you can purchase. And you talked about a trade line, getting that in there. What's the very next thing they should do?
Well, the first thing they should do is speak with somebody like myself, right? See where they're at, and then figure out what to do from there. Because we had a gentleman, I think you referred me. Basically, they had just sold their house, right, and now they want to buy, and they didn't look ahead of time. And when we ran their credit, they actually had some lates on their mortgages, right? And that actually affects you greatly when you go to purchase next.
Right, but you still were able to get them done.
Right, because there's ways to work around.
No, because you're Superman.
No, I just.
You are.
Thank you.
When you take off your jacket, right there is a red cape, and
No, I don't.
Come on.
I'm not that. But thank
no,
you.
I was stunned with that too. I thought, oh no,
Right.
what are we going to do? And you said, no problem.
You
Here's
just
what we're
can't
going
go
to
through
do.
the normal avenues like Fannie, Freddie. Those are conventional loans, VA,
Mm-hmm.
FHA. They don't want those. They can't have any lates in the last 12 months. Any mortgage lates.
I know, but there's lots of different independent lenders out there, and so what makes you different? What kind of lender are you?
Basically, I can go to many different investors. Right, we have our line to fund on, but basically what we do is we broker most of our stuff. So that means I can find the best place for your loan out there. I don't have to stay in one avenue. I can go to multiple avenues.
And so expound on that a little bit with one avenue of one bank where they have all their different products, why that's different. Because also, too, I found that sometimes banks aren't in the market for a 30-year mortgage this week because they invested differently. And so they raise their rates really high, or they say that, they're tougher with their baseline for lending. Talk to me about that a little bit and why it's different for you.
I don't want to go into where I'm picking on any banks or anything, but basically I'll just say I had a lady who just came on with us, and she worked for a bank, and she thought she had an NMLS license, meaning that she had the license to do loans. She didn't realize it was a registered license, which means she fills out a form, signs it, and sends it in, and basically she gets a number. There's no training, there's no test, there's no anything. The problem with that, so that most banks, they don't have true loan officers like myself or other people in our industry. They're not at banks. There are a couple banks that have them, but for the majority big five banks, they're just tellers who now have moved over to do the loans. You follow me?
Right.
So, but let's stay on credit and interest rates, if you don't
No,
mind.
I just wanted to talk about what was the next step for our first-time buyers. So that's good. Let's stay on credit. So what's the lowest credit rating that you can do to get a person approved for a home?
Basically, if you go FHA and VA, right?
Right.
On general, you want to stay at a 580 or higher. Okay. I can do down to 500 on a FHA, but you have to have some money to put down, like 10%. You know what I mean? So if you don't have the credit, you better have more collateral, right?
All right.
More money to put down. If you don't have the credit, you don't have money, right? Then it's very difficult. You're probably not going to have a program right now for you, but we can get you set up to work on your credit and how to fix it so that down the road you can purchase in maybe 3 to 6 months.
And so what's the sweet spot for your down payment assistance program?
Most of them want a 640 or higher.
Okay. And so if they have their credit and we get them to pay down their credit to 50% on their credit cards and not be late, how hard is it to get them to 640?
It's not that hard at all. I mean, most people that have been running credit, they're above 640 for most people.
Really?
Yeah, it's probably I'd say 10% that's below that for what I've been dealing with.
And then how long does it take if you say, oh, you've got this credit card, it's a $500 card, you've got $400 on it, you have to pay it down to $250, that's $150, so they do it. How long does it take from that point to the point where you can say, okay, now we're ready to go?
Basically, if they can give us a statement showing their new balance, we can do a rapid rescore and have it done in a week.
So that means that they can, and this just happened to us, not with that specific situation, but we had somebody and we were talking, weren't going to be able to do their deal. And then you gave them a way to go, and they're going to be ready in 14 days.
Correct.
To buy a $400,000 home.
Yeah.
And they've never owned a home.
Correct. It's just a matter of you have to sit down with somebody before you decide to do anything.
Uh-huh.
You know what I mean? You don't want to sell your house and you haven't spoken to a lender to see if you can purchase the next home.
Sure.
You know what I mean? You need to really see all that before you do it. Some people just let's put my house on the market, see if we can get somebody to purchase it, and then we'll go from there. Well, just like those people who sold their home, they were moving out of the area, so that was not an issue at first, but then they decided to come and stay here, and then it became an issue, right?
Right, but they're good to go. So they're being very successful.
But it's nicer to have a smoother transaction from the beginning if they come to us first.
Yes, and then you know what else? We have another situation where we have somebody going to sell their house and move out of state. And so we're able to help them set up that kind of budget to move and be able to do a clean transition.
Correct.
So why don't we take a break and pay some bills? What do you think?
Okay.
Okay.
You're the boss.
I am, huh? Thank you for listening to Real Estate Jerky. We're tough meets tender in the real estate industry, and we'll be right back after this break. And you can leave us a message on Facebook, Twitter, and now Instagram. Or you can listen at your leisure through our podcast on iHeart.com. We're kind of everywhere, and don't forget to let us know if you're a veteran, because we want to give you a shout out for your business on air. We'll see you when we get back.
No calls today.
Huh?
No calls today.
Why? We're just like, I feel dry today. I feel like,
Do you have 3 ex-wives in your current trophy wife
ex-wives?
wants a life insurance
Oh, I have
policy
2
3 times the
ex-wives,
size of
not
the
3.
policies you had to purchase for your previous mistakes?
I learned after the second one.
you
The
did?
next one you get, you don't. Yeah, you make sure the next one you have a list.
Your wife is pretty lovely.
Big Blue is
Yeah, it's amazing. She puts up with me.
It is.
If you're 50 or 60 years old and in reasonably good health, a $1 million
All right, yeah. All right. So next week is team and training.
What do you
We're going
want
to
to
talk
talk
about. He's actually he owns.
No, not that. I want to talk about our next second.
Sorry, we're going to talk about. We'll finish up on if you have anything with credits, and then we talk about what's going on with rents and how that's going up. And there's anything else you want to talk about, Erin?
Yeah.
What?
I'm going to talk about. I want to talk about my dairy near Passett and my the people at my ranchers.
Your ranchers?
Shout out to my ranchers.
All right.
My dairy.
How about right before we close up? So you want to talk about pending home sales at all?
Home sales?
Pending home sales?
The new homes or what?
Pending home sales has to do with that has to measures existing homes, not new home sales. It's a good indicator of existing home sales.
I don't know
They were
that
down in
info.
December, but that's only because the wealth effect, which means people were losing money in the stock market, so they weren't going out to purchase a larger. You're not going to go buy a property if you're losing money in the stock market. That's what they call the wealth effect. So however, your National Associated Realtors chief economist said that they're going to see improvement in 2019 and longer-term growth potential is very high.
I'm looking forward to 2019, 2020.
We're in 19.
No, but I'm the year and the next year.
We're in February.
I know, but I'm really excited because you said that that when the government shut down, it affects our economy.
It increases, yeah.
And then in 1 year,
idea
everything
for now,
explodes, and everybody's thinking, "Oh, we're gonna crash." And I'm kind of like sitting back going,
Yeah, I know some people, and we talk about on the air, but they're selling their $900,000 house, taking their $200,000 in profit, and they're going to rent for the next few years because they think the market's going to drop.
"Really?"
And I'm like, okay, that's great, but I don't think it's going to drop. It might stay, if we go into a recession, they might stay stagnant, or they're going to go up. They're not going to go down. There's only 2 times in history.
I know people that are selling their very expensive home and then moving out of state and buying a real inexpensive home. For
Well,
the
that's,
same
they're
home.
retiring, though.
Yeah.
Hey, this is Ed Parcaut with my co-host Erin Custer, and we're back for the final segment of our show that is Credit Score and Interest Rate Show. I can't believe it's our final segment. This thing goes by so fast, doesn't it?
I know. It seems like we just got here.
Oh, does it?
Yes, to me
you
it
did
does.
just get here.
Oh, I know, huh? Right before we started.
That's right. Some of us got here earlier.
You come flying in, it's like a guy on a horse because you're coming from the mountains, and then when I come, it's like, well, what are you rushing for?
Because you're late.
You can be late, and you don't get in trouble.
No, who's going to start the show if I'm late? You?
Me.
Okay, we'll do that next week.
No, I don't want to. Okay. Anyway, I wanted to ask you about credit. So I just want to finish up on that.
Okay.
Okay. So people are always trying to figure out. And I just think, why don't you just call Ed? He'll tell you the 1, 2, 3 of your situation on how to get started and stable in credit so that you can own a home and have future wealth. I mean, isn't that the base for everything that we're doing?
Yeah. I mean, building personal wealth through home ownership is huge. I mean, that's one of the pillars,
And I think the good news is that it takes him like 5 minutes. So it is the best spent 5 or 10 minutes of your life to just get reset and figure out where you are, talk about what you want to do, and then move forward. So I think you can do that. And he'll tell you the real numbers for credit.
Right. I mean, I had a lady come in Friday that was set up, and basically we ran her credit, see where she's at. She's been working on her credit I didn't know this prior, and she's at a good credit score, but we worked a plan. Her plan is to pay off some of her debt so she can afford a bigger house, and then she's going to buy it with her daughter and then her daughter's son-in-law.
I have that house. It's called Glen Abbey.
Oh, is it?
I have
well,
it.
they do want to, buy a ranch. Is one of the things they want to do.
I have a ranch.
Do you? What?
Yeah, I
Did
do.
you have something about a dairy too, or something? You have?
I have a family that I really love, the Van Ryn brothers and the Rhonda and Tony Brazil Dairy, and they have this amazing piece of property out in Mariposa, and they are some of the finest people that I know, and they are generation after generation after generation. I think the Van Ryn side, I know of 5 generation there. On the Brazil side, I know it's 3 generation there, but even further than that, all the way from the Azores, and they are amazing. They're amazing families. I just want to give them a shout out. If you need anything about a dairy, that's the Brazil Van Ryn. If you need anything about building or planting or organic dairy, that's the Van Ryn side. Did I say Van Ryn twice?
I don't know, but
Brazil and Van Ryn. I just want to give them a big shout out.
You're taking the whole segment over?
No, go ahead. Go ahead. So
you're getting sponsors from that, right?
no, I'm just talking about with credit. They can call you
Yes.
and you can get them squared away.
They need to sit down with somebody that's does lending, that can pull credit and put them on a plan for the future if they're not in a place right now. Most people, it's weird because the ones who don't think they can are the ones that can. And the ones who think they can usually are the ones who can't and have to get on a plan to go forward. So it's just weird. The people who don't, because I had a call from somebody else, and they're like, "We're trying to plan, to buy a house, and what's the first step?" I said, "You took the first step. You called me, right?
Right.
Ran their credit, put all their information in, and they were shocked that they were ready to go. They'd saved money for a down payment.
They couldn't
which
believe
is
it. It was
shocking.
1, 2, 3. Let's go.
Yeah, and so basically it was just amazing that they thought they couldn't, and they have money. And I think a lot of it, people think they have to have a large down payment to purchase a home these days, and
No.
you don't. You can do USDA 100% financing, right? VA 100%, FHA is 3.5% down. So that means for every 100,000 purchase, that's $3,500 down, and that all can be a gift.
And heaven help us if we do have a 20% down situation. They're ready to go.
Right.
We don't have to worry. I also want you to ask you about rents right now. What are you seeing rents doing? Because I just had a situation last night where I thought, oh my goodness.
What was your situation last night?
I was showing houses in the rain, and there were tenants in there, and they were charging, the landlord was charging $1,000 for each side. And I know that my investor was saying I can get 14 and 14. So rents are going up crazy.
That's exactly what I saw. I saw pending, not pending home sales, that's something else. Single family rents I saw year over year are up almost 3%. So that, the one thing about purchasing your own home is your payment will stay for the rest of the time you live in that house at one payment, right? If you go and rent, you're subject to each time your lease is up, if they're going to raise the rents on you.
Right.
And most people are. And I had a situation where they're up in Sacramento and the person raised their rent $400.
I know, that's what this guy was talking about. Yeah. And by the way, I have that duplex ready for sale, and that went down $25,000. So we're at $375
and that'd
in
be
Manteca.
Great for a first-time home buyer to buy that duplex, live in one side, use the rent from the other side to qualify, and then down the road you'll probably have no payment.
What about our guys? We should call them.
Okay,
that's perfect. All right. So, what about you were talking about pending home sales in the break?
What about them?
I wanted to know what your thoughts are.
Well, one of my thoughts is there's just not enough pending homes because there's just not enough inventory, right? I mean, how can you? We have ourselves a bunch of people who are looking for homes that I've qualified for you, that it is very difficult for them to find the house they want, right?
Yes.
And it's just the inventory's down. So if you're looking to sell your house, you're thinking about selling your house and possibly moving out of the area or somewhere else, give Erin a call so she can get that person to buy that house from you.
Yeah, because I even show houses in the rain at 7 at night.
Were you dancing in the rain while you were selling?
Yes, I was. I had my little umbrella, and we were having a great time.
Cooking your heels? Gene Kelly like?
Yeah. I used to be a dancer.
All right, we'll have to find that.
I was on Dance Fever.
Were you?
Yes.
Oh, we'll definitely have to find that one.
Okay, so do we clear up everything on credit?
Google
that the point is that
what
they
was
need
your maiden name? I'm just
it was so Erin Dowling. You know what? So do we clear up everything on credit that people don't really get all the whole information about credit when purchasing unless they're getting a tri-bureau pulled
Right. And
by a mortgage lender, right?
And they also should get a copy of that credit report from them.
Yes.
Because by law, they're supposed to give it to you so you can have it and look at it and know what to
And
do
what do
with
they
it.
cost? Because they can call and buy it, right?
Yeah, they can. Well, actually, they could, if they want to look at their credit just to see where they are, they can get it from their bureau, just to see what the credit's on there, to see if they need to work on some of the late payments or if they have collections. And let's talk about collection, because that's something we haven't talked about. If you have collections right now, don't do anything until you sit down with a mortgage lender, because one of the biggest issues is it could be an old collection. You call them to pay them, and then it updates to current, and now it affects your FICO score. Right.
Okay.
And if you are going to pay them without talking to anybody, make sure you negotiate a deletion letter. That is a letter that gets it off your credit. You have to ask. And I tell people, the first person is going to say no. The second person, you have to just move up that ladder for that to work. Because one of the gentlemen we were talking about earlier that I'm working with, he was able to get the deletion letter to take this a couple of these collections off. And,
All right.
they were current collections, right? So that's huge for
Did
him.
he have to pay any settlement charge there? I mean, did he have to
He just had to pay, I think, the full price for what was owed on it to get that. Usually, if you negotiate, pennies on the dollar, they're not going to give you a deletion letter. But if you give them what they are owed, they can. And I don't know. It depends on each bureau, each person.
But you'll show them how to do that.
Yes.
Okay,
very much
good.
so.
And then how much does a tri-bureau cost you?
About $28.
So if
that's
anybody
it.
wanted to just call and they're not ready to buy, they can call you and order a tri-bureau, and you would go over it with them, and all
Correct.
they have is a $28 charge.
Correct. But
See.
most of the time, we get it back when they go do their loan with us.
Because we're going to get them a house, huh?
That's correct. Because we put them on a plan. So if it's not today, it's when. It's down the
Yes.
road.
So the answer is yes, yes, yes. You can get a house. You just have to call and get a plan, right?
That is correct.
And sometimes you're going to call and be surprised to know that you can move forward right now.
Yeah, and that's why I tell most
And
people.
we just had 2 of those last week.
Yeah.
Right?
You'll be in a house within 30 days unless you can't find any houses that you want.
Right.
Yeah.
And sometimes you're closing them in 21 days.
No, I'm talking about when you sit down with me from the beginning before you even find the house. Be careful. It's we don't sit around. It's a process. We get approved. You get out there, because what we
We're
do is
looking.
we actually take that information and get all your information for income, all that, and get you approved ahead of time. So when you actually sit down and you get into contract, we're way ahead of the game.
Yeah, it's not a prequel.
It's only one day that we need the rest of the underwriting, and then we send in the last little things, the conditions, and you're ready to go.
Order the appraisal.
Right.
How long is it taking the appraisals now?
Less than 7 days.
See.
Some of ours are coming in 4 days, and I think it's just because there's not a lot of people purchasing right now, because you just said there was only 400 homes sold in Stanislaus County, and I don't know, probably to say 80% of them had a loan on them, possibly. And so that's just not a lot of appraisals.
Oh, so everybody's sitting around. I'm not sitting around, and neither are you. We're busy.
And we're
Okay.
actually in the last seconds of our show.
Oh, really?
Yes. Want
Okay.
to say goodbye before I read our little script here?
Yes. Goodbye, everybody. This is a great time to buy. We live in an amazing valley where the prices are affordable, and we have well and able-bodied people to help you get there. So call Ed or myself, and we'll get you into a home.
You want to shout out to your granddaughter?
Baby Gray, Grandma's going to see you tomorrow.
So is that good for her? Or?
I don't know.
Okay.
But you know what? Devin and Lauren are really amazing, and they're doing a great job taking care of that baby.
Yeah, we had our grandson last night.
You did?
Yeah, he's a handful. Aren't they always? Well, the best part of grandchildren is you can hand them back.
You know what I like?
You
I
can
think
give them a bunch of sugar, load them up on everything they're not supposed to have, and send them back.
I think you should put jingle bells on their shoes. I did that on my kids, so I could tell where they're all running off to.
Hey, I hope we gave you plenty to chew on and understanding about credit scores. And we didn't get heavily in interest rates. We were talking about credit scores. Hey, we'll be back here next Saturday with a very, very special guest, Mel Bradley. He is a team leader for Team in Training and the Leukemia Lymphoma Society. Mel has an incredible story, and can't wait to hear this. We'll also talk about his other business, which has to do with solar, so you can get your answers about solar. And we'll be here again next week. And thank you for listening to us.
Yeah, thank you. See you next week.
Sometimes I wanna be Jesse James.